Good afternoon. This is Ken Long at Tortoise Capital with a debriefing of day one of the live trading workshop at the Van Tharp Institute in Raleigh, August 8, 2017. These are about 7 or 8 case studies that were representative of the trades that we did today in a lively market. This first one is a typical owl entry at the green dot in Apple, which grew to become the big mover of the day. And they all start looking the same when they leave the river. And we had an unambiguous move, an owl entry. We could have entered, and we did enter at the break of the Z3 line for a second position quick strike. When we had a 1-2-3 reversal, we cashed about 3.5R at the red dot. We bought the resumption of the move in a pocket entry, added a second position in the next pocket, added a third position in the third pocket with about 4R in hand. We had a 1-2-3 reversal as the market began to consolidate, and as we approached the Bollinger Band mean, we cashed those three positions for about another 6R. We ventured into another pocket entry resumption after it found support at the bottom of the Z3 pinch in the RL270. This scratched shortly hereafter, so no additional. So that was a big move in Apple for the day. Inside our simultaneous live chat trading room, where folks were learning from a distance, at another trader that was working through a 3-minute chart on the same trade and framed as a hybrid frog entry from the open on April. So this is traded in a slightly different fashion. The hybrid frog entry here after a 70% frog box move off the open. So the entry is here. There was an opportunity for a pocket entry here on a 1-2-3 reversal. The hybrid frog automatic entry is here, so that's two positions. After a 2 frog box move, we execute the 2R battle drill, and upon failure to fail, adds a third position and then a 1-2-3 exit. So this was about potentially 8R on 3-minute bars on a 3-sized position with open risk never more than 1R. So the exit is hit here. A resumption of the trade in the pocket gets a fractional win of about probably 0.3 or 0.4R, and that's out for the day. So the difference between trading this on 3-minute and 1-minute bars is slightly different, but all standard patterns that we practice and drill on. And notice the importance of the Z3 pinch that establishes our expectations. This is a long, slow pull in IWM that began as a Z3 pinch and then a pocket entry with an initial risk of about 30 cents. This took off through the Z3 pinch and just kept moving. We never added additional position. As it approached lunchtime and became a Z3 pinch, this was the last position that we were going to exit, and we finally did when price crossed over the RL270, and this turned out to be a nice 0.7 or 0.8 gain going into the open. This was also an owl opportunity. We didn't have the will to do it. We had the time, pattern, and money, but we didn't have the will. So we looked for time, will, pattern, and money. Everything was present except the will to trade this because it had been a quiet upward day, and we didn't think that a move back to the VWAP justified that short at that position, so we elected not to take the trade. It turns out that that decision, the trade not taken, was an owl entry here, which would have brought us all the way back to a natural exit point, almost where the original entry was made. And so I want you to notice the yin-yang pattern of the market gives and the market takes away, and those measured moves in the broad indexes are not unusual and can be traded the way we teach. The maximum divergence from the RL270 to the RL10 occurs here, and that's the same size of the move from the RL270 down below. So there is a certain symmetry in this yin-yang that is instructive. So we call this one the yin-yang trade, and the series for IWM on 8 August 2017 started with an owl. Lots to learn from there. Now, this is one in the diamonds later in the afternoon when the market had rolled over a little further, and this is the Dow 30 Industrials. We had a Z3 pinch. There were some indications in some of the quicker moving indexes that the market was collapsing, and so rather than having to wait for the mechanical entry at the Z3P breakdown at the red dot, there were actually a couple indications that would allow us to get short in the diamonds at the first or the second yellow dot, and so that difference can make a difference, especially in the futures. We call this buying or selling on the button when we have a reason to buy a Z3 pinch or sell a pinch right at the Bollinger Band mean, and then front run the breakout from the Z3P. So we talk about that extensively in the workshop, buying or selling on the button when we're in a pinch or super pinch. And then this would be the trade exit management, the stop management, so that by the time this trade was bouncing and recovering, we would have locked in a gain from either the red dot or either of the yellow dots. This went on to fail further, but the initial management of the stops into a no-lose position is instructive. So this is a trade in American Express, and the trade we actually managed after the trader brought it to our attention was this one. Was there a trade available down here? So what we quickly framed was our understanding of the AXP pattern so far, and that was strong move up. We noticed that the maximum divergence from the RL10 to the VWAP was the size of this orange box, and then after this cascaded and failed in an owl pattern that crossed the 270, crossed the VWAP, and continued, we noticed that if the market were to be truly symmetrical, the size of the bump above the VWAP would be the size of the bump below the VWAP, and price could have, should have, gotten this far down. When it didn't, we hypothesized that the second leg, being terminated early, might give us a buying opportunity, and so we took an owl entry around 86.10 with a 20-cent initial risk on American Express. This was a 20-cent risk box on a 60-cent position sizing box. So a move in our favor of one yellow box would equate to about a 0.3 of an R win, and this is one that got up 2/3 of that back to the VWAP, and so when it was at hesitation point here, starting to try to move out, we just said, let's lock in our gains at about a 0.2 at 86.22. This went on to rejoin the RL270s, so gave us about a 0.3 gain. We exited later about 86.35, but this gives us an indication of how we construct the geometry or the frame of the trade using these principles of pinch and stretch. This is Apple, and this was at the end of that last move we looked at. The third position went in, and then we cashed it. That was a large win. Then a re-entry ended up being a scratch trade later. We were not willing to go short the strongest stock on an up day, but when it came back to the VWAP and we'd seen 1, 2, 3, 4 surges downward and held support at the VWAP, after an initial scare sell-off that didn't materialize any further, we took a 1, 2, 3 entry and front run the owl just a little bit, and then still cashed a second piece. I call this a snack in the afternoon. So this is not the runaway move, but it was an opportunity for agile traders to make some gains. The important thing to notice was that the RL90 by this time had started to roll up, as well as the 30, and that VWAP support held. This was a move later in the day in Intel. The trader noticed that there was a low, a higher high, and then a series of lower lows. 1, 2, 3, 4, 5 legs down. We noticed a potential owl here. We didn't take it. We noticed a potential pocket here. We didn't take it. As the second leg moved back to the VWAP, the question was asked, is this a trade that we need to get into now while the two legs were in place? And so what we did was construct a trade frame that answered this thing statistically by looking at both directions. We decided that our risk box would be about 20 cents, and so we bracketed the VWAP with that, and we said if it would break down below the yellow box, we would get short at 44. If it broke above we would get long at 36.61. Uh, Meanwhile, it came back to the VWAP and found support, showed no signs of making a new lower low, and so we decided to buy on the button at the green line with the idea that if we saw price move through for 36.44, we would go short with about a zero point 0.1 or a 0.15 position size loss. But if it were to work, we would expect this to go back and test the recent swing high at 36.68, which would give us about a zero point 0.4 or zero point 0.5 position size win, and this looked like a reasonable way to make our first entries into what had been a leader in the tech sector, which was strong all day. As it moved further into the close, we ended up scratching this around 36.50, so there was no follow through. However, we liked the posture that we put ourselves in. This was a walkthrough trade from one of our traders in the distance learning trading room, and we worked through a series of decision points of when to buy, when to sell, and different considerations for various entries at the yellow dots. That's recorded under separate video and is available upon request if interested. This was after a strong move up and then a gentle decline in the afternoon on a strong day up in the market when we noticed that XIV, the volatility pair, made a breakdown in a Z3P. The trader made an outstanding entry here, and it continued to decline. And with money in hand, 2R in hand, and momentum, he added the second position, and then it became a runaway move to the downside. This move on a 1-2 exit captured the profit of a 2 position size excellent gain. And then the discussion question was, when, after a nice asymptotic move like this, can we get in? So we took the initial risk box that was used to manage the first 2 positions and said if it would break to a new low, we would take a short with that manageable risk box here. It did. It moved down 3 bars in a row and gave us almost 2R within about 3 minutes, which we cashed with a risk box off the bottom after a Z3 excursion. We bought the owl re-entry at this location. However, the move the rest of the day was basically flat. This was a $9 move in about 30 minutes, which represents a 10% intraday move, about a range stat and a half just from the Bollinger Band mean. And so the afternoon moves can be quite surprising in bull markets, and that's why we stay alert all the way to the end. The market closed. We were flat. Because it closed below the VWAP, we're on anticipating a potential gap down tomorrow, and we're planning our positions accordingly. So that's Ken Long from Tortoise Capital with a review of the live trading workshop. Our morning session on typical trading netted us about 10R on 20 trades. Worst loser minus 0.2, biggest winner individual trade +2. So we're pretty satisfied with our win rate, SQN, trader quality number, and are now preparing our evening report and preparations for day 2 tomorrow. We hope to update you on that. So thanks so much for your kind attention. Keep your risk measured and your powder dry.